Welcome to Retire Smart with David Brooks. I'm Chip Maxwell. Well, David, as always, we're going to get to the news, but charitable giving is a big part of the culture here at Retire Smart. In fact, our second segment, we're going to get into something that we were involved with just this past week. We're also involved with an operation called Exodus Road out of Colorado, which fights the sex trafficking industry, rescues people from sex trafficking and also investigates and nails the people doing it. There's a movie out right now called Song of Freedom. It's getting a lot of attention. You saw it, right?
Yeah, we actually saw that on July 4th because that was the first day it was in theaters. And my wife and I are, I don't go to the movies as much as I used to, simply because the content hasn't really been there. And I love movies. So to get me not to go to the movies is hard. But I always, what it costs to go today, and I can afford a movie. But boy, it's a commitment. But anyway, so we made it a priority to go see this on its opening day. We often like to support movies that support causes or messages that we believe in, my wife and I, and this would a lot of Christian movies, etc. But Song of Freedom was produced by Angel Studios, and they had a unique way of marketing this kind of a pay it forward. But man, what a great movie. It stars Jim Caviezel, and it's a true story. They follow a true story of a gentleman that worked for Homeland Security that had busted close to 300 people that were known pedophiles, committed crimes. But someone asked him, well, how many of the kids have you actually saved? And it kind of hit him between the eyes, and so he basically goes on leave and goes and rescues a child and then goes to rescue the sibling of this child, and that's basically the story of this movie. But he's gone on to rescue hundreds and hundreds of kids in real life. The movie's an amazing experience. And what I love is that it actually was the number one at the box office that day, and so people it didn't get any advertising, wasn't allowed to be talked about. Wasn't even referenced on like movie tickets and places like that. You go to these websites, and they didn't even have it listed. It's just amazing how anti free speech some of the world is today, regarding things like this. But full disclosure, I also spent money the same week and saw the new Indiana Jones movie.
Okay.
Just because as a kid, I had to see the finish of the series. It was okay. It was way better than the fourth one, but I do love movies. But it was a great movie for a great cause. If you haven't seen it, I would highly encourage you to go spend money and see it in the theater and support it, because we want producers of movies to know that people will support content like that, and I think it's really important. So great movie, great message.
Song of Freedom. Well, David, you were singing a song recently that you've been singing for weeks, months even, at the team meeting. Actually, you used a word I haven't heard you use in a while, ugly. I got it right in my notes. The data is ugly, and the economic fundamentals still are scary, even though there's some surface-level good news in the economy.
Well, the data continues to come in pretty ugly. So we had a horrible jobs report that came in. So basically, the jobs report we just got in for June was we had 209,000 jobs, well below expectations. And the day prior, the ADP jobs report said it would be over almost 500,000. So that was a complete miss.
What happened?
Well, and then when you go look in here, people are getting laid off, believe it or not, and you actually saw a contraction in jobs in the retail sector, something we've been warning about for a while. So the retail sector lost over 11,000 jobs. Now, here's the other problem I have with these numbers. They also had to revise down the previous month's numbers by 110,000 jobs. So
Wait a minute. All that happy talk from May, and I think April too. I think that jobs number was revised downward.
Yes, and so the jobs aren't, and since the beginning of the year, 450,000 of the so-called new jobs have been confirmed as only to be part-time, 30 hours or less, hourly jobs, not full-time jobs. So it's disappointing. And then in this number, Chip, almost 30% of it was government employees. So the private sector was less than 150,000.
So
And I've talked about it for years on this program. If you don't create 250,000 jobs a month, you're going backwards in a pretty significant way, because just the population growth. We should be creating about 500,000 to 600,000 jobs if the economy was where some people are trying to tell you that it is. So the data is just not good. Jobs are starting to fade. Wage inflation is starting to fade. And then the Challenger Jobs Report, which is basically how many job openings we have, that got cut by over 500,000 jobs again, 2 months in a row now. So we had 11 million job openings a few months ago. Now we barely have 9 million job openings in America. 2 million job openings have just vanished, right? So companies that were going to hire are decided, you know what, we're just going to hold off. We're not going to hire even, and so the next step would be if they start to lay off more. And then Microsoft just this week just announced another round of cuts after the 10,000 people they let go in January. So again, the data points keep pointing to a contracting economy, and it's not just here, Chip, it's abroad as well. China is crashing. Everybody thought they would explode, and I did it too about a year ago on the reopening. China's going south, Europe's going south, and the U.S. economy's going south. But if you just look at the news and look at what the markets are doing based on inflation numbers that just came out, you'd think everything is rosy, and that's just not the case.
Well, let's talk about that for a minute because the inflation number for June just came out this past week. Here's Fox Business headline, actually. Inflation rose just 3% in June as price pressures continue to cool. Well, to me, that looks like good news, but you still seem a little anxious, David.
All right, so yes, in general, it is actually good news, but is it what does it really mean? So first off, you have to understand is June last year was the peak number, 9.1% on the headline inflation. So therefore, that was the most difficult number to climb over for year-over-year comparison. So you would expect this number to be lower. Okay, so if you go back to May of 2022, inflation in May of 2022 was 8.6 on the headline. This year, it was 4.0. So stacking that, that's 12.4% inflation in the last 24 months headline, right,
Ouch.
for May. Well, for June, it was 9.1, and then this year, 3.0. Stack those, that's 12.1.
Oh, you're almost the same place.
Do you see the pattern here? And if you go back and look, and so the comparables get tougher going forward here as the inflation number goes down because they're going to be up against 6-7% numbers, and we actually think this may be the best number we see printed for 6 or 8 months. In other words, we don't think you're going to get the 2% core inflation number that the Fed is targeting for a long time, which is why, even though this inflation number came out like this and talking heads, oh, the Fed should pause here, they're not going to. You watch, mark my words, in 2 weeks, rates are going up again, and the Fed has more work to do. And again, I don't like it because the only thing they're doing is destroying the economy that I'm talking about, and that's why I'm so bearish at the moment or so concerned for the data sets that we're seeing come across our table.
Well, that leads me to my next topic then. And folks, stay with us throughout the show. I promise we're going to have good news for you before we're done, but not yet. David, you also mentioned, well, you and Michael Luna last week were talking about difficulties in the home insurance market, and then household net worth is plummeting. David, you used the term violent snap. Were you talking about the housing market or the economy in general that we're about to experience a violent snap?
Well, in the markets in general. So what happens is the markets can continue to rise. And this is very similar to when I started my career 24 years ago. In the late 90s, the markets kept rising, but the data started to fade, right? The data was telling us these things aren't real. And back then, Chip, it was all about .com. Today, that's just replaced with the term AI. So companies now keep touting out, well, we're going to have an AI strategy, an artificial intelligence strategy. And again, I keep talking about, unfortunately, it's artificially promoting stock prices where there's no real revenue yet from any real mainstream source for AI to actually generate difference in earnings. And so we are now going to be in earnings for the next 3 weeks. We'll be going through the main part of the earnings season. This is where about 80% of the S&P 500 will give their quarterly earnings over these next 3 weeks. And we'll find out if there's proof in the pudding because people are saying, oh, earnings are going to be growing. Well, earnings growth right now is projected by most Wall Street consensus to be less than 5% earnings growth, and we think it's going to be even lower than that. And so if we get into a contractory period of earnings, then that means the stock prices usually contract or follow them. So when I said the violent snap, I'm just talking about typically when the markets get a little bit on the sugar high, I use that term a lot, get stretched out, they snap back, and there'll be some catalyst, some piece of news that'll be the excuse on this. And so I'm very confident in the way we are positioning our portfolios because we have a unique way of getting exposure to the upside that allows us to get protection on the downside using some option strategies and other things. And then we also have what we call a preservation model where we extended duration and we're going to be able to take advantage of that and maybe even extend more duration. In other words, how long a bonds you have, because tactically there'll be a unique opportunity. If the Fed really does finish hiking rates, whether it's July or September or whenever that is, then bonds will have an opportunity to appreciate because rates will eventually fall after that. We'll see what it looks like. But anyway, just take caution, take heed out there. Make sure you understand that the markets, even though they're up, the S&P was up as of this recording over 15% year to date. The bulk of that gain is coming from just a handful of stocks. In fact, I showed in the Monday meeting, I don't know if I showed it in the Monday meeting you were in there or it was just the advisor training, but I showed them if you break the S&P index out by equal weighting it instead of market weighting it, it was only up 5% year to date. Very different numbers. And so people need to understand, is the broad economy really starting to expand? I don't think so. There's some folks on Wall Street that are saying that. I just disagree completely. And, we'll find out if we're right or not.
Well, the American public doesn't seem optimistic. We only have about 30 seconds for this, David, but I was so intrigued by this headline. We run into a lot of economic and financial jargon. This headline says, more Americans are feeling lousy about their finances. Now, Yahoo Finance was the source, but it was based on a study by the Federal Reserve, the 2022 Economic Well-Being of U.S. Households. I guess that result is not surprising.
No, and 35% of U.S. adults reported they are worse off financially than a year ago. Yet we've had some of the best wage inflation in the last 50 years in people earning jobs. But because the stacking inflation, Chip, they're going backwards, right? Even though they're getting 4 or 5% raises, they're going backwards because their household goods over the last 36 months are up over 20%. That is unsustainable for growth, and that's why we think what we think.
Hence the technical term lousy. Don't get caught up in lousy. Check in with us. Get the complimentary report card, 402-369-7777. No charge, no obligation. We'll review your whole financial situation. Maybe you're in good shape. Maybe you need to make some changes. We'll make recommendations on what you ought to do going forward. Complimentary report card, 402-369-7777. 402-369-7777. Up next, the compliance officer is in the house, but he comes in peace. And the head of Tax Smart also is waiting in the wings. It's a double-barreled guest segment next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. We're always innovating and breaking new ground at Retire Smart. This week, up first on our show, two special guests in our second segment. David, who's up first?
Thank you, Chip. Yeah, so first up, I've got Abigail McNaney.
Yep.
I still got to get used to saying that. She was married here not that long ago. But anyway, hey, you survived tax season. How you doing?
Honestly, it's been a few months. I've had time to refresh, so I'm doing great.
Well, you are now in full proactive mode,
Yes.
working with business owners, entrepreneurs, folks that are unfortunately in the higher tax brackets that are looking for ways to proactively get ahead of the curve, so to speak, when it comes to the tax code. So,
Yeah.
one of the things you and I have discussed often is about 4 out of 10 entities or business owners are actually operating in the wrong structure, right?
Right. Yeah. Yeah.
Why do you think that is?
I think sometimes when you start a business, you just kind of go with what people say or a quick, Google search or maybe what is the fastest one to, enter into. What's the fastest one to open so I can just get started doing what I need to do.
Well, that reminds me, I actually had a call this morning. A referral came in to me, and it was a business owner. It was just that. Set up an LLC,
Right.
it was a side business that turned into a very lucrative real business, doing a couple $1 million a year in
Wow.
revenue now.
Awesome.
But started hiring employees. So you had to go back and file as an S corp,
Mhm.
right? So you can be an LLC. You just have to notice file that you want to be taxed as an S corp, and this is what you have to do if you want to have employees, W-2
Right.
employees. Well, lo and behold, he's not paying himself. He's paying his employees, but it turns out he's not taking the W-2. And he goes, well, why is that a problem? I'm like, well, there's multiple problems. Number one, that's considered reasonable compensation so that
Yep.
payroll taxes can be paid properly on the wages that your job is doing. And I'm
Right.
like, are you working there? Well, yeah, I'm working. And number two, we talked about how if he plans on selling this business at some point, he's going to mess up his valuation. In other words, a buyer would have to go back in and realize they're going to have to hire someone to do the job he's doing.
Right.
That person needs to get paid a reasonable wage or a competitive wage to do that job, and that's not on his books. So therefore, what he's showing his profit margins aren't really true, and that's going to hurt him in the negotiations.
Right.
If that were the strategy. So there's so many things that have to be done correctly. Whether you're looking for your exit strategy, you're looking to minimize or reduce your current tax load, or just want to understand how all this stuff works together. And that's what you kind of focus your time on, right, Abigail?
Absolutely. Yeah, right now that's exactly what we're doing. So meeting with those small business owners, high income earners, and just like you did, evaluate what are you doing right now? Are you taking, asking questions to see, because you don't know what you don't know. That's what we always say.
Well, and it reminds me too, we sat and we had somebody come in who was a real estate investor. And it was a referral from one of our Retire Smart clients that came in, one of the advisors, like, hey, he's got a partner and they own a bunch of real estate and they're doing pretty good, but they don't know what they don't know. And that's exactly what
Right.
they said. They listen to the show and they're fans of the show. And we come to find out that these guys own a lot of units. They've got about 40 doors. So, so 40 rental units all in their name.
Right.
So that's a huge liability risk, number one. Number two, the way they were calculating depreciation was not exactly the way you would want to see it. Anyway, let's just put it lightly. So there's red flags. There's what we call audit risks that can happen when you get too aggressive on a tax return. And they're like, well, we were told we could do this. It's mind-boggling some of the stuff we do see. I mean, we recently had somebody come in with a handwritten tax return. Haven't seen one of those in a while. This year's the
No.
first time I've seen a handwritten one in a few years. And there was some stuff on that tax return that kind of really threw me for a loop. And when we ask and question people, well, I don't know, I Googled and said I could do this, and this was a self-prepared return. That's always the scary one. So I highly encourage you folks, if you're still filing your own tax return, I would just ask why.
Right.
Is it worth paying a competent professional to get it right so that you don't have to go back? Because if you have a mistake, it's going to cost you a lot more than what it costs to prepare the tax return,
Right.
typically 5 to 10x. So get competent advice, and then what we want you to do with someone like Abigail, if you're an entrepreneur in a growing business, if you've got over $1 million in revenue for your company, you're probably leaving some serious tax savings on the table through proactive
Absolutely.
strategies, right?
Right.
So talk about how you kind of uncover and what usually I think you come up with about 3 to 5
Yep.
strategies that most people are not aware of or not doing simply because no one's told them, right?
Yeah. So when we have our onboarding process, again, we ask just a lot of questions. One, asking your revenue just to see if you're a good fit for Retire Smart, because we want to make sure we can provide the best and most tax savings. So we have a significant handful that we can do in-house here. And so, yeah, we do have our core strategies of, about 5 to 7, depending on what what business you are in. There's certain strategies that work better for you. And so, yeah, there's plenty of strategies. Come in and see. It's hard to, I can name a few, but who knows if they'll work,
Well, and that's just it. This is why the process, when you come in and see Abigail and our team at Tax Smart, Abigail, Eric, or anyone on the team,
Right.
what they're going to do is they're going to review typically your last year or two of tax returns, ask you some questions about projected revenue. Do you actually have do you actually have up to date accounting? I'm blown away with how many business owners don't even have accounting, monthly accounting, et cetera, going on, so they don't know where their numbers lie. But anyway, and then we can help you and coach you into, well, based on where you're going and growing, you may want to consider an entity switch before year end. You may want to consider adding a few things. So there's a myriad of strategies that Abigail, Eric, and the entire team at Tax Smart could lay out before your feet and potentially save you literally sometimes well over $100,000 in the next 1, 2, or 3 years. And think what that does to the bottom line of a small business operator.
It's amazing. Yeah.
So listen, I know this was short and sweet this week. I'm just, we were glad to get you back in. I know you had your head down there through tax season pretty hard, and you're able to smile a little more now.
Yes.
So, so we'll look forward to having you back on the show. And folks, pay attention. Abigail and I will be doing a class for business owners later this year, potentially at the Midwest Learning Center. If you want to get signed up for that, give us a call. Abigail, thank you so much for stopping by.
Thanks for having me.
So now I've got actually my big brother, literally, and older brother, Lou, joining the show. And Lou's joined our firm about 1.5 years ago, I guess, already, which is, wow, time has flown by. So Lou, welcome to the show. First time on our radio show.
Thank you for having me. It's unusual because usually I'm behind the scenes. For those that listening out there, I'm I'm usually the one in the background while the recording's going on because I have a little electronic button I push, and David's headset gets an electric shock if he says something I don't approve.
He's the one that stops me if I go too far ranting and raving. He's actually our chief compliance officer. So, so just tell our listening audience a little about your background prior to coming in as my chief compliance officer here for Retire Smart, Smart Wealth, etc. You were basically in defense law for almost 3 decades. So
For 28 years, I was a litigator, which was primarily did a lot of criminal law, but did some other things. But I spent literally every day in a courtroom, interacting and on my feet. And quite a different thing as I converted over here. You convinced me to come to basically be a corporate lawyer, but it's really the same thing because there I had a duty to our clients every day, to my clients every day. And here we have a fiduciary duty. And my role as chief compliance officer is basically to be the person who oversees that and make sure we comply with all the rules and regulations, but that we actually are acting as a fiduciary to all our clients.
Well, speaking of that, we want to always act in the best interest of our clients, and there's a lot of firms out there that don't have compliance folks on site, and that could be a red flag in itself. But anyway, so we're glad you joined. But one of the things too that I thought you thought was pretty cool, and I actually recruited Lou for a couple of years. It took me a while to convince him to come on board. And by the way, I'm trying to recruit our younger brother as well to come into the firm. So then we'll just have to go get Brooks Brothers suits, I guess. But anyway, so giving back, steward leadership. We love to give back to our community. You've heard Chip and I talk on the show forever, and Lou, we've been able this past week to actually support a charity that you've been supporting literally since college. And so that talk a little about that.
Absolutely, and that's one of the things that helped David convince me to come over, because his philosophy in the financial field is similar as I was as an attorney. We really care about what we're doing and the people we're helping, and servant leadership. And I was fortunate enough that in the late 80s, when I pledged the fraternity in college, that my college fraternity, Pi Kappa Phi, was the only and still is the only fraternal organization in America that adopted or didn't adopt a charity, but we founded our own. In 1977, we founded an organization. Its name's changed. It's now called the Ability Experience. And the Ability Experience is about helping people with disabilities. And one of the big primary things was back in that time frame, they were coming up with a new event, a bicycle ride across the United States. And I decided I wanted to be one of the people, and I applied and was selected. And I was part of the first team that rode. We have varying teams now, one from San Francisco, one from LA, one from Seattle, that bicycle across the entire United States and converge on DC every year. And I'm heavily involved in DC every year and do some ride-alongs with them. And in 1989, I bicycled from San Francisco to DC, and we came right through Nebraska, Grand Rapids,
Grand Island.
through Grand Island, Grand Island, and then Lincoln, and then here in Omaha. And then this past week on Thursday, I joined the team, and we bicycled from Lincoln to Omaha. I joined them on their way across the country, and it was a very great experience being back with the guys again. And we do a lot of things. We stopped off the night before. I was actually helping participate in what we call friendship visits. We stop off at places like Camp Easter Seals, where my daughter actually is at one right now, and that's where this comes full circle. I was going to mention, basically, before I even had a child, I was doing this, and then almost 20 years ago in September, my daughter was born after an unfortunate tragic car accident and difficult operating delivery, and she has multiple significant disabilities, including cerebral palsy, autism, a seizure disorder, and significant intellectual disabilities and other ADHD, you name it. And the impact that this organization has had on thousands and thousands of people similar to her is amazing. One of the things that we do with the fundraising and awareness is that we're able to have interactive experiences. In 2019, I was blessed, because of this organization, the Ability Experience, to push my daughter in the wheelchair division of the Marine Corps Marathon. I've run a lot of races, do a lot of sports. The most emotional, I was crying as 25 Marines bent down on their knees and high-fived my daughter as we came across the finish line, and I just completely lost it. So yeah, it's an incredible organization, and one of the things that I loved about joining here is that you allow all our employees to support their charities, and you help them support their charities.
Well, that's it. Being a good steward of money, I always tell the employees, like, I got to take care of you first. And people always tell you the customer's always right. No, my clients come second, believe it or not. our employees are number one, because if I take care of my employees, they'll take care of our clients. And if our clients are taken care of, then we have revenue and we can take care of our community. And that's part of the way we give back and through all these charities that we support. So we were able to sponsor the breakfast for the guys coming through this year, which in next year we'll probably step up and do a little bit bigger. We got it on the counter a little late, but it was awesome. And we'll make sure we actually tell you guys about this next time. Maybe we'll even have them in our parking lot next year when they're riding through. But a great charity, a great cause, and you'll hear more from Lou in future visits here on the show. We just wanted to introduce him to everybody, but unfortunately, we are running out of time for the segment, Lou. So thank you so much for bringing that awesome charity to our attention.
Just one last quick thing. I'll say that I'll have on the YouTube channel, we'll put up a link if anyone's interested in the charity. We'll put a connection link.
Absolutely, so you can learn more about the Ability Experience. All right, thank you so much. Chip, what do we got next?
Up next, you have questions. David Brooks has answers. Q&A is next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. Well, David, we're going to get to the Q&A in just a moment here. I just have to express some disappointment. Your brother Lou was just on the previous segment. I got to tell you, I mean, it's great. He's very impressive. And Journey of Hope, we'll talk more about that, the charitable cause, before we're done today. But I was kind of hoping for a little more sibling rivalry to spill, a little dirt on you, you know. So I'm going to have to prep Lou a little more for his next segment, but it was great to hear from him.
He has plenty of that. So.
All right. Well, in the meantime, let's get to the Q&A. And the first question, David, is about Social Security. I know that taking Social Security before full retirement age reduces the payout, but I heard some chatter on the radio about taking Social Security as early as possible and then investing that money to get a better return on it. What do you think of that strategy?
Well, for most people, it doesn't work. Not saying it can't work, but here's the reality. What are you going to invest it in, right? So are you going to risk the asset? So if you take it hypothetically at 62, you're basically taking a 30% cut from what your full retirement age would be. So now you got to make up that 30% basically over the next 5 years. So to do that, you've got to earn at least about a 4.8% rate of return. Now, in today's market, you could actually do that, Chip. You could take the money and turn around and buy a T-bill and get that kind of return. But will those rates be there for the next 5 years? Most likely not. So could you do that? Because you're only going to get the checks each month. So you can't get the whole lump sum of the next 5 years payout early and then invest it and grow it. You have to invest it each month going forward and then get that return. And you have some risk there, whether you're using fixed income instruments to invest it, where you have interest rate risk, or you're using equities or something that you're going to hope to get growth out of. And obviously, there's some risk to either one of those strategies. So if you can guarantee yourself you get a 30% hike by waiting, for most people, because they're not going to have the discipline, number one, to invest all the dollars.
That's going to be pretty hard to beat.
You'd have to do it. And number two, do you realize that depending on what sources of income you have other than that Social Security, you're going to pay tax on that Social Security. You're not going to keep it all, right? So there's a lot of factors that go into when to draw Social Security. And so while I understand some people like to sell that idea, hey, take the money and invest it and grow it, for most people, unfortunately, that's going to be the wrong answer. Now, it doesn't mean it's the wrong answer for you. But one of the things we help people do is the S in the SMART proprietary planning process, Chip, is understand source of income and when we think the ultimate timing should be of turning sources of income like Social Security on. And I would highly encourage this questioner to actually attend the Social Security Blueprint class that is led by Sean Swanson, one of our advisors, and because it's very educational, and then we can show you how we can run the break even and just show you what those numbers look like exactly for you.
We've got one of those coming up August 1st, actually. I'll just go ahead and throw that out there. 402-369-7777. The thing is, they fill up. There's no charge. There's no obligation. But you need to call and let us know you're coming because they do fill up. David, the next question, speaking of the SMART process, this question is about the SMART process. The questioner says, I hear radio ads by numerous financial firms. They all sound the same. Everybody talks about tax planning and protecting sources of income from market volatility. I'm sure they all provide quality professional advice. What separates your operation from the others?
Well, I would tell you, for you to find that out, you should probably visit one or two and then make your choice, right? So if you're in the market for someone who's going to be your retirement planner, what separates us is we typically don't work with anybody else, right? So we're a very retirement-centric shop here, if you will, firm that we focus on those that are at or near retirement, typically within 10 years or less, or already in retirement. Now, I hear copycats on the radio talking tax strategies, and I'm always asking, what tax strategies do they offer you? And we usually hear crickets when we ask, and these are national firms as well. There is another gentleman on the radio that's in our marketplace, but doesn't live here, so he operates from another state. In fact, last time I checked, they didn't have any licensed professionals here in the state. And then he talks and brags that we would never accept a commission, yet he has an insurance license. I found that kind of odd. And on top of that, true holistic financial planning is about more than just investments, right? So if someone needs to have life insurance for their estate plan, Chip, you have to have an insurance license to offer that. But guess what? You would earn a commission. So we're always telling people, yes, we are a fiduciary, but there are times we would use an insurance license to place something in place for you, and we get compensated from that. So one of the things we separate us is we're going to tell you the whole truth, so to speak. We're going to disclose everything and operate as a fiduciary. If you need to get a Medicare supplemental policy or a Medicare Advantage policy, we are licensed to offer those products, and those products have compensation built into them. So, just be wary of what you hear on the radio, including this show. Do your due diligence, and kick the tires with as many firms as you feel comfortable, but before you make your choice. And, I think that we have a unique proprietary smart planning process that I've developed. It's been 24 years experience versus we do hear what I think are copycats on the radio all the time. But again, there are competent professionals. You're absolutely right. There's good people out there, but you should find who you're simpatico with, who you feel comfortable with, because the other thing is you got to be willing to open up to whoever you're going to choose as your advisor. You got to tell them the whole truth and nothing but the truth, so to speak. In other words, even if there's bad news on the horizon, I can tell you, I believe a recession's coming here. We've talked about it for a while, and it's going to get into next year. So some entrepreneurs are going to come in and talk to us that ultimately we may have to coach them through things like bankruptcy. I did this in 08, 09. When times get ugly, you don't want to make rash decisions. And so it's not just all great, we're making money in the markets. It's complete financial holistic planning. That is what most people that we deal with are looking for. If you're just looking for an asset allocator, then that's not us,
David, the thing I like as a client is the team approach. Somebody who went to one of our events, I think he was testing me because I know this person, and he said, well, how much do you and your wife have invested with Retire Smart? And I said, everything. We trust the team here. And my wife and I just met with you this past week, David. We had our annual meeting as clients. And what I like is it isn't just you. There are a half a dozen peers, financial advisors who review all the cases. You get the benefit of all of that talent and experience as well, coming up with strategies, looking at it from every angle. It is not a static, set it and forget it process, automatic pilot. You are getting constant attention from Retire Smart, from the entire team.
Yeah, we have
that makes me feel better as a
client.
client.
We have over a dozen licensed advisors right here just in the Omaha office that people can, and we do. We lean on each one of the advisors and give them an area to become the most proficient in. Like we talked about Sean Swanson just a minute ago. He hosts a Social Security class. Mike Schudel runs our estate planning class. Mike has a law degree, as do you, Chip, as does Lou, who was just on the segment. So we got a few lawyers in here, and I have to deal with that, folks. Right? But we do. We take the team approach so that you're not dealing with a generalist or what we call a one-man operation. And what happens if something happens to that person, right? So I think we've built out the best system possible under the regulatory environment we operate in to give people the best holistic advice.
One more question, David. This one's about leadership. And the questioner says, I've heard you talk about leadership and mentoring and how important good leadership is for all kinds of institutions. The Big Red football program is about to open fall camp to prepare for the 2023 season. What is your impression of new coach Matt Rule and the job he is doing?
Well, I will tell you, I actually upgraded my season tickets, so I'm a believer thus far. I can tell you.
You're bullish on Big Red.
Yeah, I'm bullish on Big Red. At least, I'm not saying we're going to win the Big Ten or anything like that. I'm just saying the program definitely seems to have taken a turn for the better. And and to the questioner's point here, it is leadership. Matt Rule has come in and set a tone, and now you're seeing it across the other coaches from the whole entire athletic department. You're just seeing them support each other, right? You're seeing coaches show up at baseball games, volleyball games, basketball games from other sports. They're all now connected. They're all supporting each other, and he just seems to have changed the tone on campus. And we have several alumni, including you, right here that work for us at Retire Smart. So Fridays around here at the office, it's almost all red, in the fall days. Everybody takes it seriously. I often take some of the employees with me to the games that, we become a fan of. I didn't go to school here, and most of you guys know that I went to school down in Florida. But yes, I'm a believer, and the leadership, to his point, has been there. And one of my favorite leadership guys that has mentored me, and I was blessed to share the stage with him 2 years ago, is John Maxwell, former pastor who's kind of considered the guru of leadership. And I got to give a keynote. I actually had to follow John, so that's a tough assignment.
Yeah.
But John, one of his quotes is, "Everything rises and falls on leadership," and I believe that wholeheartedly. And so, yeah, I do believe Matt Rule's doing a good job. But I try to be a good leader. I'm far from perfect, but I'm constantly educating and gaining knowledge myself. And I go to a lot of leadership conferences every year. As you know, I'm on the road a lot because I think you have to be a lifelong learner if you're going to become a good listener and a good leader.
David, we're out of time for Q&A this week. How many 15-minute phone call appointment openings do we have?
We have just 6. So if you would like to get your best question answered or most pressing question, take advantage of that.
That's no charge, no obligation. Call to schedule a 15-minute phone conference with one of our licensed financial advisors. 402-369-7777. 402-369-7777. How about that economic good news that we promised? And it's right here in Nebraska. We'll tell you about it next on Retire Smart with David Brooks. Welcome back to Retire Smart with David Brooks. I'm Chip Maxwell. David, let's get into some good news here. Here's a headline from the Wall Street Journal: the states in America where incomes grow faster, and right in the middle of the robust growth group, we see Nebraska.
Yeah, so earnings surged in states right here in the Midwest and a few others. So North Dakota led the charge with 9.7% increase in wages in the report, but Nebraska came in pretty strong as well. I think number 5 at 8.6% increase in wages. So that is extremely strong. That's the wages going from the first quarter of 2022 through first quarter of 2023. Well, the nationwide average was about 5.4% over that time period. And again, we talked about earlier in the show, wages have grown healthy. We're seeing that start to subside, but 5.4% is a healthy year-over-year wage growth for the nation on average. But inflation, as we just talked about stacking, people are paying over 12% more over that same time period.
You're
for
still
goods and
losing
services.
ground, yeah.
So unfortunately, going backwards. And what's interesting is the states that suffered in this report. That's what I found interesting, is it pointed to states that got harmed. So for instance, New York was one of the worst states when it comes to wage growth at just 2.6%, California at just 2.9%, New Jersey 4.3%, Oregon 4.5%, a couple others sprinkled in there. You would think it would be different the way those states, and the states I mentioned happen to be run by people that lean to the left on the political aisle. And with all the incentive packages passed in the last couple of years, infrastructure, green energy, all these extra spending, you would think wages would grow in those states. They would benefit. But the clear benefactors of this report show the migration was more important, the cost of living migration. People left those cities and went to Texas and Florida, et cetera, where wages were growing, and they were, had a little more freedom during the COVID pandemic, et cetera. So this is just showing you that we are seeing revenue grow in states that have a more open economy and allow you to choose what you want to do, and are benefactors of the migration. And then here in the Midwest, where we were able to sustain and wages went up pretty healthy here, but some of the areas on the periphery did not do so well, and that's like the coastal states, et cetera. So wages are up, but again, they're not up enough to actually usurp the inflationary pressures that we're seeing again, and that doesn't bode well going forward. So I know this is supposed to be good news, Chip.
Stay on target.
But it is good news here in Nebraska. We're out earning our peers, right? So wages are growing faster here than the average in the country, and we were in the top 5. That is great news. And in other good news, our values of our land continue to grow. So those are that are landowners. That's good news because the valuations are increasing for agricultural land in particular.
Yeah, the Nebraska Examiner had a story: Nebraska ag land values at record high, increasing 14% during the past year. What jumped out at me, there was a quotation from an economist at the Nebraska Farm Bureau it's a very profitable time to be in agriculture. Well, usually it's about the problems that the ag market faces, but things are real. Is this one of those? Is there a but clause to this, or is this just flat out good news?
Well, there is a but clause, unfortunately, there. So it is good news the valuation is going up, but the bad news is commodity prices are falling pretty fast right now. Corn and soybeans are going the wrong direction. So when the crops come out of the ground, but the value of the land is up, and that's great for the owner, the farmer, the family farmer, because their net worth is increasing while this is happening. The bad news is that we still have an inheritance tax here when you try to pass that increased value land onto your kids. And if your farm is big enough, you're going to have potentially a major federal estate tax problem coming up in just 2.5 years when the what you can exempt federally gets cut by more than half. So there's some significant things you'd want to do if you are a family member, even if even if you just cash rent out, you're not a family farm anymore, but it's a farm you and siblings maybe inherited from mom or grandpa, and keep it in the family. You need to make sure you're taking caution, understand what these increased valuations mean. Now, it's just interesting seeing some of the prices rise, but we're talking about Nebraska farmland rose 14% so far this year. That's a pretty healthy increase, right? And I know we've dealt with a couple clients that are getting some crazy offers. Now, I've got one prospective client that I've been
Crazy
working
good.
with. Yeah, crazy good. But he's selling some land where these offers are coming in, and then buying land a little further west, still in the state, to just get more acreage for the same dollar because he thinks it'll continue going on that way. But anyway, there's good news there. There's good news all around. Wages are growing better here in Nebraska and elsewhere, and we talked about it forever. Yes, I think a recession's coming, but you're in the right place to sit through it, right? Because economically, this is a great city to go through a recession.
Well, friends, I hope you enjoyed that dabbling in good news, because now our final story, David, this is also in the Wall Street Journal. The headline is America's Retirees Are Investing More Like 30-year-olds. David, these are people who are not familiar with the SMART process.
Well, the problem is we get in good times, at least with the equity markets, and this year's an example of it. The S&P, if you just look at the indices in the Dow, they're up big, right? 15% already first half of the year. And so it's FOMO, F-O-M-O, fear of missing out. So people chase those returns and fear like they're not going to do well. You can buy bonds right now and get a 5% rate of return on the bonds. You can buy T-bills guaranteed by the government and get a 5% rate of return. The forward growth of equities, Chip, from here forward is about 5%. That's the consensus from Wall Street. So you're taking all this risk, and that's what this article talks about. There are people in their 80s that are basically fully invested 100% in stocks. That's scary to me. So you're taking all the risk to potentially get the same return projected from the bonds or the cash right now. And like we talked about this a couple weeks ago, we've never had this before where the three major asset classes, fixed income bonds, cash or T-bills or cash equivalents, and stocks are all projected to make you the same amount of money over the next 12 months. So why take all that risk? And because here's the problem is people forget what it was like. And I was talking with the advisors who had somebody came in for one of our vision appointments, and they were in 100% equities, and they're like, oh, yeah, no, we didn't go down in COVID. And, they have short-term memories. They just forget because the market recovered. And we go back and ask, well, how did you do in 2008 or 2001? Oh, we did fine. We just kind of pull up the charts.
No,
the markets
you
went
didn't.
down 50%
You got
both those times.
clobbered,
Yeah.
but it came back.
Yeah,
Yeah.
But the problem is people don't understand risk management when you have to start taking income from these portfolios, whether it's chosen or forced. And people forget that they're forced to do this, Chip, a la RMDs, required minimum distributions. So, and then when you're forced to take this out, if your account was to get going during downturn, you have a less probability of that money lasting your entire retirement. Again, this is why you want to sit down with an independent fiduciary based planner who's going to show you the math and the actual we call it rate versus range. We want to show you how much volatility your portfolio has for the projected rate of return, and why the methodology of just being 100% in stocks is typically not a good one if you're going to need to cash out, et cetera. So I can just tell you, some people were chasing. There was a guy I mentioned in the article who was kind of following a more conservative plan, but realized his rate of return wasn't getting there. So he just said, I'm going all in so I can retire by this year. Well, what if the market goes backwards at 50%? You're going to work another 15 years till you get it back?
Yeah.
So Take heed, take caution. Just have somebody professionally show you how much risk is in your portfolio. That's what I would mention to folks. And that is, by the way, part of our report card, which we'd be happy to do for you complimentary.
Well, let's talk about that complimentary report card again. There's no charge and there's no obligation, but we'll review your whole situation. We'll make recommendations on what we think you ought to do going forward. That's all complimentary. Now, if you want to just dip a toe in the water, we've got that 32-page tax guide. That is full of charts, data, strategies. Maybe you want one of those 6 openings we have for a 15-minute phone conference with one of our advisors. And then don't forget about Abigail McNaney and Tax Smart. If you'd like to meet with her, again, no charge, no obligation, just to find out what Tax Smart can do for you. For any and all of these offerings, it's 402-369-7777. 402-369-7777. And let's remember again, Journey of Hope. That is the charitable bike ride that Lou Brooks was talking about earlier in the show. Lou was in on the ground floor of that. He joined him this week for the leg from Lincoln to Omaha. They're riding cross country. They do it every year to raise money. The organization is called Ability Experience, but if you type in Journey of Hope and boom, there that bike ride will come up on your screen. And if you would like, they're still going. They're headed to the East Coast to Washington, D.C. If you'd like to support them, find the donor button. And actually, if you want to give a donation in honor of Allie Brooks, that is Lou's special needs daughter. Allie Brooks, give a donation in her honor, and folks will know it came through us. Journey of Hope. They would appreciate your support. David, we're out of time for this week. Bring us home.
Hey, have a blessed and prosperous week, and just make sure you're taking care of the ones you love and giving to the charities that you love the most. Have a great and awesome week.
Thank you for listening to Retire Smart with David Brooks. I'm Chip Maxwell. For David Brooks and the entire team at Retire Smart, have a great week.